I'm Boni Tunya. This is Business. The Nairobi Securities Exchange is set to introduce a futures market this year. The futures exchange is expected to deepen the country's capital markets while giving the exchange alternative revenue streams as it moves forward. Here is KTN's Michael Karanja with the NSE strategy.
For close to 6 decades, the Nairobi Securities Exchange has thrived in trading equities and bonds, a job it has done with aplomb. But with the cutthroat competition from other well-established exchanges on the continent, the NSE has got a new spring in its step as it seeks to deepen its offering. The boss plans to introduce exchange-traded funds by the end of the first half of the year.
Whereas we used to be viewed mainly as the dark continent, the Africa Rising story is gaining more and more prominence. I think investors are paying more attention to frontier markets and in particular to the African continent.
In the derivatives market, the NSE plans to start with financial futures and options, which will be on indices, interest rates, currencies and single stock futures. This gives the exchange an edge as it will now offer a variety of trading instruments of interest to corporate Kenya. A futures exchange ordinarily helps businesses mitigate against future losses arising from fluctuations in prices. This bodes well with companies that deal a lot in foreign exchange, as well as fuel importation in a bid to cover themselves from any losses. This also ensures that the NSE provides a local solution for companies that have in the past sought hedging from the international market. Already the NSE has invested 250 million shillings in the new systems to handle the derivatives market. The developments at the boards come as it plans to self-list by June this year. Michael Karanja, KTN Business.
The last couple of weeks have seen Kenyans treated to a new terminology in business, rebasing of the economy. Now, this is after the Kenya National Bureau of Statistics announced that it will be revising calculations of the size and composition of the economy. But what does it mean for you? What exactly is the value for rebasing? Here's Adelaide Chengole.
For the first time in almost 20 years, Kenya will be undertaking a statistical review of the economy that should see the size of the country's GDP jump 20% from 3.6 trillion to 4.3 trillion shillings. This review, commonly known as rebasing, will push the country into a middle-income nation 16 years ahead of the Vision 2030 schedule.
It's a normal statistical procedure. It is done at the discretion of those in charge, depending on seeing if there is reason. If they think that the economy has grown to the extent that some statistics have not been captured, then they rebase.
But the rebasing is a double-edged sword for Kenya. Although the country now has bragging rights that it is a middle-income country, it still depends on loans and aid, all of which could be suspended once it attains middle-income economy status.
And by being categorized as a middle-income economy, we will have serious challenges of market access because we will no longer be competing in the same league as our neighbors in Uganda, Tanzania, and other countries of the Great Lakes region.
Let's not look and say, oh, our competitor is Kenya, Uganda, Tanzania, whatever. It is China. It is Indonesia. It is all Indians, all this Chindia or whatever. We talk about these competitors will go and get into those markets.
And because the review is simply statistical and is not an actual reflection of growth on the ground, analysts warn that the review will not have any impact on the actual state of the economy, and the harsh realities that continue to assail Kenyans will continue to exist.
I wouldn't mind what economy I come from if my government had a strong welfare state to ensure that every Kenyan has a minimum basic access to goods and services. I wouldn't care really what statistic they're giving me, because really I don't eat that.
For the government, however, the exercise makes a lot of sense as it will bring much needed relief to the state, which has been facing increasing calls to reduce its debt burden. Adelaide Chengole, KTN Business.